Be honest. The first time you opened a trading app, it looked like a game, right? Big green button, big red button, up or down. Pick one and pray. That's exactly what the app wants it to feel like. But here's the gap between beginners and professionals. When a real trader clicks buy, 5 decisions already happened before the finger ever moved. The click is just the receipt. Miss those 5 decisions, and you're not trading, you're the exit liquidity for someone who didn't. So let's open up what actually happens when you press buy or sell. Here it is. A trade is 5 decisions. Entry, where you get in. Invalidation, the spot on the chart that proves you wrong. Risk, what being wrong costs you in dollars. Target, where you're going. And management, what you do while the whole thing plays out. Read that list again and notice something. The click isn't on it. The trade happens in your head before your finger moves. The button is the last step of a trade, never the first. Here's the plan. First, what a buy actually is, anatomically. Then what a sell actually is. And then we assemble all 5 decisions on one setup, so you see the full picture the way a trader sees it. When you press buy, you're making one specific claim. Price rises from my entry. That's it. That's the bet. If it rises, the distance it travels is your gain. But notice where a trader puts the stop loss. Below the entry and usually below a recent low. Why there? Because that low is the line that proves the idea wrong. If price breaks it, the reason you entered is dead. So the trade should be too. The stop isn't an annoyance. It's you agreeing on the cost of being wrong in advance. And the target? Up at the highs, where the liquidity is sitting, where business gets done. You learned that word in lesson 2. Now it's on your chart. Got the picture? Now grab the whole thing and flip it upside down. That's a sell. Press sell, and you're claiming the opposite. Price falls from my entry. Everything mirrors. Your stop now lives above, usually above a recent high, because that's what proves this idea wrong. Your target sits below, at the lows, at the liquidity beneath them. Same skeleton, flipped. Entry, stop on the side that proves you wrong. Target on the side that pays you. Buy or sell, the anatomy never changes. Learn it once, own it forever. Quick pause. Those 5 decisions? Funded View has a place for every single one. Log them on every trade, and your own trading stops being a mystery to you. It's free, linked below. Now let's put all 5 on one setup. Watch how it assembles. Entry, the exact price where your criteria says act, not a feeling. A condition you waited for. Invalidation, the level that proves the idea wrong. Your stop lives there, not at some random round number, not at whatever feels close. Risk, the distance between entry and stop, converted to dollars. You choose that number before you enter, and it's an amount that genuinely doesn't hurt you. Target, the level you're traveling to. And management, the plan for everything in between. 5 decisions, 1 picture. If price rises, the target pays you. If it falls, the stop protects you. Either way, and this is the whole point. Nothing surprises you. Here's why this lesson is everything. The trader who makes all 5 decisions can take a loss and be completely fine. The loss was planned, sized, and survivable. It was a business expense. The button clicker who skipped them? He doesn't have losses. He has disasters. Because a loss you never defined has no bottom. Defined risk is what keeps you in the game long enough for skill to even matter. That's the entire philosophy of this series in one line. Recap. A buy speculates up from entry. Stop below, targets above. A sell is the perfect mirror. And every real trade is 5 decisions. Entry, invalidation, risk, target, management. The click is the last step. Never the first. Now, every one of those trades runs through a broker, and that broker hands you a tool that has quietly ended more beginner accounts than any bad setup ever has. Leverage. Here's the question to sit with. If leverage just multiplies your position, why does it kill accounts on the way up and on the way down? Nobody explains it, which is exactly why we do next lesson. Subscribe so you don't lose the thread. 0 to funded in order. Lesson 5 is right here, and Funded View is built for exactly what you learned today. Logging those 5 decisions on every trade you take. Free, linked below. Catch you in the next one.